Is tax lien investing safe or is it risky? Are you going to lose all your money? You're going to bet the farm on it. You're going to bet the Harley, and all of a sudden you lose it all. So let's dive into that. I know you, as a beginner tax lien or deed investor, you definitely have some questions, right? And there's always that uncertainty whenever you're getting into anything new. So that's why I want to take a few minutes here, and I want to chat about, is it a risky business? What are you going to lose if you get into this business and you completely screw it up? Okay. So why don't we start and establish, some of the risks that the average person takes? Like when you look at the stock market, I read a statistic that basically 90% of people in the stock market lose money, 5% break even, and 5% make money. So you're kind of just gambling in that regard, but you have the illusion of control. Now, one of the things that I pride myself on is I like to invest in things where I have as much control as possible. And even in the worst case scenario, I can come out ahead of the game. Okay. And that's really one of the reasons why I like tax lien investing. And here's why. So one of the nice things about tax liens is your investment is secured by real estate, kind of the same way the bank secures, like if you don't make your bank payment, the bank's going to take that property back. The asset is the collateral, right? So that is definitely nice, especially when you look at like crypto and a lot of, NFTs and all this sort of stuff where people have, they thought they were on top of the world. Everybody was a crypto expert. And where are they now, right? It's really just kind of gambling for the most part for most people. So with a tax lien, remember with a tax lien, you're not actually buying the property. What you're doing is you're paying someone's taxes for them. And then from there, because the county needs that money, the collateral is the real estate. So the worst case scenario with a tax lien is maybe they don't redeem. Okay. So if they don't redeem, that's when you can foreclose. That's when you can take that property. So in tax liens, a lot of the worst case scenario is sometimes the best case scenario. Because like if a house is worth $100,000 and you buy the lien for 2, and then you have to foreclose on it, you'll probably pay out 1 or 2 years prior or post taxes on that, and then to foreclose. So with that, you're getting $100,000 house for a couple $1,000. Now, what are the odds on that, right? So tax liens are safe, secure, and predictable because 95% of the time they're going to redeem. So that means 1 in 20 liens is going to get you the home run. So we'll dive into some more things that can go wrong. But before we continue, I'm Dustin Hahn. I've been doing this stuff for a very long time, almost up to 20 years now. And I help beginner tax lien investors get into this. So if you like this channel, make sure to go ahead, give this thing a thumbs up and subscribe if you like the content. Ask a question in the comments because that's where I get a lot of ideas for these videos coming up. And if you want to get started, I give away a totally free mini course below. The ABCs of tax liens, 100 tax lien and deed facts, tax lien and deed investing 101. And this is going to show you exactly how to get started. Just click the more info button. I don't send it. I don't ask for money anywhere for this thing. So make sure to subscribe and grab a copy of that while you're watching here. So as we dive into this, remember, the tax lien is always the priority lien on any property. So the liens work kind of like, they work like a pyramid. So he who records first has the first right of being able to foreclose, which is great because the tax lien is going to wipe out anybody above it. The next thing is the government is involved in overseeing this. And there's strict government regulations and a very high level of transparency and accountability. So you're not going to have somebody, like a Bernie Madoff in there screwing you around. Your money is safe and fixed. Okay. So the other thing that's fixed is the interest rate. It's not going to be going up and down like the stock market. When you get that thing, boom, it is locked in. All right. Now, compared to other investments, there's definitely a lower competition level, which is very, very nice in this business. So, worst case scenario is, maybe you buy that's the thing, right? Like it just takes a little bit of basic research in this business. And if you get one of these properties, and let's say the worst case, you buy a lien on a property, the house burns down, it gets flooded, even then you're still going to make money because the tax lien is generally a lot lower value than the price of the land. So meaning like the totally worst case scenario, if the property burns down, you got to bulldoze it and take it out, the land is still going to be worth much more than your worst case scenario. So that's really what I love about this business. So, if you look at a ratio where all of your tax lien investments have a multiple of like 3 to 5, meaning the land. So if you pay someone's taxes for 1,000 and then you can see the land assessed value is like 10,000, you are really hedged. Now, could you have a scenario where you buy the tax lien, doesn't redeem? So during the redemption period, it burns down. And then, somebody, Uncle Dave had his pesticide truck parked in the garageway and it caught up in flames. And then now they need to bring in the environmental team and things like that. Maybe one in tens of thousands that happens. With a tax deed, it's going to be a bit higher risk because you are inheriting any type of environmental type of damage in that situation. So as far as the risks go in this business, the other risk could be maybe you buy a property that, or you get the lien on something that's like landlocked or some weird shaped property. So use the app called Landglide to get parcel codes and things like that to be able to analyze. And really, as long as you're doing a little bit of research, you're not really going to go wrong for the most part. So that is one of the things that I really love about this business is compared to other investments, the risk factor here is so much lower, right? You look at like statistics on starting a new business, like 90% of most businesses are failing within the first couple of years. And then from there in the remaining 5 years, like another 80% of businesses are failing. So many people have ideas for side hustles or going out garage sailing, or they love comic books, or, they want to open a kiddie daycare and this and that. And all that's fine. Those are great aspirations, but why not make your money in real estate and then fund any type of passion project that you have, secure your residual income and then go do whatever you want. Like there's a lot of fun businesses that you would probably do for free, like the kitty coffee shop, right? There's one of those here. And hey, the owners of that thing, just nothing but joy, right? You're playing with kittens all day long. Or the goat yoga. I don't know if you guys have seen the goat yoga, but you do yoga and there's goats like climbing all over you and stuff like that. Like that's totally cool too. Like have a business that like, what, I would do this stuff for free. Like I like riding my bike. I'm not going to start a business on riding my bike, but if I did, I probably wouldn't charge much money or any for it because I just love doing it. So, we kind of get brainwashed these days of like, follow your passion. And yeah, that's cool. But a better way to look at it is like follow the opportunity and then, fund your passions. I remember back in the day, my dad owned a motorcycle shop and the mechanics never really rode their bikes that much. And I think that part of it is they were just sick of it. They went into something for their passion and then you lose the passion for that business because you're now having to be involved in so much of the stuff and you're just burnt out and you don't even want to look at it anymore. So real estate is a fun game. Real estate is a very fun game. You're playing Monopoly in real life and nothing feels better, in my opinion, than winning in business or getting a good deal. Like there's really nothing that feels better, in my opinion. You get that win, you get hooked. There's a lot of ups and downs. There's a lot of emotions. And especially, if you got to fight, battle it out on a deal, negotiate back and forth. It's one of the best feelings in the world. And I really can't recommend it enough for anybody who's on the fence. And if you do need that help, remember in the link below for anybody just joining, go ahead and grab the ABCs of Tax Lien, go through the free mini course. Like it's going to walk you through it. I literally used to sell this stuff and ship it out in the mail. And lots of people would buy it. The 50,000 people have got started with Tax Liens and Deeds with this stuff. One of the questions came in is I need a mentor. So if you want, you can book, if you want us to mentor you or help you out. Every now and then we do bring on a few mentoring students and we help them get into the business. So below this, you can click a link to book a call. And even if we don't work together, we'll have a great conversation. We'll get you going on the right track. We'll reveal to you some good game plan. So there's a link below in the description. You'll have the option to like book a call or get the book or get both. So to do that, just click the more info button and all of that will drop down. So the next question here is, should I invest $30,000 into tax liens? So the thing about this business is it's very customizable. There's not a one solution fits all, and that's what I love about it. So a couple things here. It depends, like, is that all the money you have? Where do you live? Type things. So like if all you have is 30 grand for real estate investing, I probably wouldn't put all of that into tax liens out of the gate, because remember, with a tax lien, your money's going to be tied up sometimes for 2 to 3 years. So if that's all the capital you have, then I would probably do a mix of liens and deeds. Now, definitely say the 1 in 20 strategy, right? So say you take 10,000 of that and you buy 20 tax liens. So with that, you're going to end up with one property. Okay. So that property could be worth 20, 30 grand just in itself. So you can turn that 10 into 20 or 30, maybe even 40. And then you have 20 left for buying tax deeds up to 80, 90% below market value. You can flip them and really put more money back into tax liens. So that is an approach that could definitely make sense for you if you have about 30 grand. It just kind of depends also kind of where you live and stuff like that. So, that's part of it. If you want to hop on a call with us, we'll help you out with that. Like I say, we do work with folks, but the one thing that I really pride ourselves on is we do have a training portal, and in that portal, we go through things, but we also update it because we're really doing this business every single day. Like, we have an active real estate business, we have employees, we have staff, and that's one of the things that I really pride ourselves on. We've made a lot of mistakes in real estate, and that's what my goal is, to share with you the mistakes that we've made so you don't have to go through that. So let's see. The question is Utah. Let me just take a look here. So with Utah, what you're going to want to do, let's see here. Yeah, Utah is going to be deeds. And actually, I think we did go to Utah. We did like an infield documentary once. And so you just started learning about it. So if Utah is going to be a deed state, then you could be looking into some deeds there. You can be looking into Arizona as well. And remember, this stuff is kind of seasonal depending on where you are. So with that, you want to find out when the string of sales are going to be. You want to go during that time. But then in the off seasons, you can be looking into other states and doing remote states. And that's what I like about over-the-counter deeds, is you can do it totally remotely. Call, get the list of the deeds that are over the counter. Sure, there's going to be a lot of junk in there, but you'll be able to find some diamonds in the rough. I mentioned the other day, one of our guys, he literally found over-the-counter property. He talked to us same day, did a coaching call, and later that day, he bought 7 acres for $500. It's worth $4,000 an acre, and there is a brand new modular home on that property. Okay. So what about Wisconsin? I've actually been to Wisconsin looking at deeds before, and there's definitely some good opportunity there as well. So guys, here's the way to look at it. Regardless on whether or not you want to do tax liens or tax deeds, always get started in your own backyard. Even if you don't really have too much intention there, just see what's going on, because remember, what you're able to do is sometimes pick these things up before the tax deed auction. You can flip them, you can wholesale them. So you want to see, and just go to the auction as well, because it's a great place to network and connect with cash buyers. Okay. So if you're in Wisconsin, find out when that sale is, go attend. Okay. Even if you don't have money to buy, go attend to get your boots on the ground and just start getting exposed to this business. All right. So those are my thoughts here today. Thanks a lot, everybody, for tuning in. And remember, if you're a beginner getting going, this mini course is a must for you. It's going to walk you through it. I literally used to sell this sort of stuff. And it's going to walk you through. We got a map on every single state. Click the more info button. You can go through Tax Lien and Deed Investing 101. And it's a little more granular than the broadness of YouTube. And it's just here to help. Like, my goal is to help you guys get into this because, like, as a beginner, it's hard, right? It's very uncertain. There's not a lot of information, especially there's 3,300 counties. Every county is a little bit different. So between these YouTube videos and the trainings, like, you're going to be underway. Some folks watching will like literally buy property tomorrow. Okay. Or maybe even today, depending on what time it is. So let that motivate you. This is one of the best times to be in this business. And I know just because you're tuning in and following this stuff, you're going to be able to do it. So click the more info button for the book below, and you can book a call if you want our help to get you going. So thanks for tuning in, folks. We'll see you tomorrow.